What is up? Welcome back to another video. In this video, I'm going to be talking about liquidity, but most importantly, I'm going to talk about how you're going to use liquidity to enter and, well, to exit your trade, sorry. So I'm going to be talking about how you find your take profit zones by using liquidity. So let's firstly talk about our main points of interest, our main liquidity. So first of all, we have low resistance liquidity, and all low resistance liquidity is when price is making a clear trend line that all the retail traders are most likely trading. So for example, right here we have, imagine these are all imagine these lines as price action, so these are all candles. This would be low resistance liquidity run, because under here there would be resting a lot of stop losses, and also above here there would be a lot of stop losses. So what normally happens is these like to get taken by liquidity. So if you imagine that you are a retail trader, what a retail trader is going to do, someone that doesn't trade smart money, is they're going to see that price has tapped this trend line once, tapped it twice, three times, four times. So they're going to enter into a buy, and they're going to put their stop loss by this trend line. So as soon as a chart and the price action comes below this line, people are losing out on money and people are getting stopped out. So that is called low resistance liquidity run. That is one way to find liquidity in the market, and I'll give you guys a live example. So looking at the charts right here, this would be low resistance liquidity run right here. Let me just label that for you. Low resistance liquidity run. Let's make it middle. And there you go. So that is low resistance liquidity run, because as you could imagine, if you are not a smart money concept trader and you are just a retail trader looking at the market, as you can see, the price taps this trend line once, twice, three times, four times. So what are people going to do? People are going to enter long positions at this trend line and put their stops losses below, and obviously targeting higher. And yeah, so if we carry out that trend line liquidity, then below here is a lot of sell stops and a lot of sell side liquidity. Now, all sell side liquidity means is just sell stops and buy stops. So if I say buy side liquidity, it is buy side. So for example, this is buy side liquidity. So all that means is there are buy stops resting above here, and then obviously sell stops is sell side liquidity. So that is one way you're going to find liquidity. Another way is equal highs and equal lows. So if you imagine this is the chart again, we get price action, then price action will make equal highs or equal lows, and then they are a very strong liquidity target. So as you can see, we have equal highs. Now all that means is when price action comes to the same point in a different time frame. So as you can see right here, we have this trend line. So we have these equal highs. So what people would like to do is, when the price action comes back up to these equal highs, a lot of people will be shorting because they think it is a strong resistance zone, or they think it's a strong resistance line, or support, but actually it is not. It's just us ICT traders find their liquidity. So retail traders would have their take profits down here and their stop losses down there. Obviously that is not how we trade. And then equal lows are the opposite, so they're just lows that come to the same price action multiple times in different time frames. So here would be equal lows, and an example for that in the chart is, let me find it, right here. As you can see, we have equal lows on the 5 minute. So if we zoom in, as you can see, we have this price action here, and price action also comes to this point in the market twice without sweeping it. So these would be labeled equal lows. So they are our equal lows. Now these are an extremely strong point that market likes to draw to. So you could almost imagine these as magnets. Now, price doesn't always have to 100% come and take the equal lows or equal highs or the lows resistance liquidity. But it is a very good target to have if you get a setup in that direction. And then obviously our final piece of liquidity is just swing highs and swing lows. So if we get normal price action and then we have the swing high, so that would be liquidity right there, that would be buy side, and then we have this swing low, so that would be sell side liquidity. I hope that makes sense. So buy side liquidity would be all here, so that would be buy side, that would be buy side. It's just swing highs and swing lows. So if we look at the chart, here is buy side liquidity, and then here is sell side liquidity. So what I mean by buy side liquidity is just where buy stops are sitting, and then sell side is just where sell stops are sitting. So this is sell side liquidity. Yeah, so that's just quickly going over the different types of liquidity. Now, how do we use this to target and use as targets in price action? So actually, if we look at our inversion model today, the price action has a nice inversion model on the 1 minute time frame around here. So let's just delete some of this liquidity. So as you can see, price action ends up being bullish today. So if we drop down to the 1 minute time frame, we have this inversion set up that is very nice. So we are respecting this 1 minute bullish fair value gap at 2:30, and then price is respecting it here at 3:20, and then we have this bearish candle with shung displacement that gets inversed. So our entry would be on the candle close above, which would be right here. Our stop loss would be below it. So our stop loss would be a candle close above. But don't worry about the model too much if you're unfamiliar with it right now. But let's just say we entered into this position right here. Now, where would our take profit be? So there are different things that you could do. Some people like to just have a target and take 100% off at that target. I know other people would like to take partials at certain points in the market, but me, I like to take, well, it depends on the trade. Sometimes I like to take partials, sometimes I like to take 100% of the trade off, which you'll see throughout this channel. So let's say we entered into the market. Where would I be targeting right now for a long position? And for me, this is very clear. I would be targeting this buy side liquidity as my main target. This would be where I take most, if not all, of my position off. Now, I know some of you are probably saying we have equal highs here, as you can see. So what I would do is, as soon as price breaks these equal highs, because they are just such a strong draw on liquidity, then you could move your stop loss to break even. So if we play the price action, let's say price hits these equal highs, which they do here, I would move my stop loss to break even, meaning I'm in a risk-free trade, or I would even take off a lot of my position there, and then my main target would be buy side liquidity, which gets hit eventually. So using swing highs and swing lows, in this example, swing high is just a very good example for where price action wants to go, especially if you get a good entry. Now, if you have equal highs above as your main target, that is an extremely good target to have. So for example, we have these on the 5 minute time frame, we have these, where is it? On the 5 minute time frame, we have equal lows somewhere. That I want to be targeted tomorrow if we get the trade. Let Let me just take off replay mode and I'll find these equal lows. So on the 5-minute time frame, we have equal lows here. So this is what I want to get taken tomorrow, is these equal lows here. But then we also have more equal lows if I can find them. We have those equal lows there, and we also have these equal lows down here. Sorry, that took me so long to find. Yeah, so we have two sets of equal lows. So if price is bearish tomorrow, I would want to target these equal lows down here, as I think that is a very good draw on liquidity. So if you get into any short positions, well, I will actually be uploading this video tomorrow, so hopefully if these positions get hit tomorrow, you know I would have made a decent amount of money, as of right now. This is the day prior to the price action on Wednesday. If price is bearish, then I will be targeting these sell side liquidity. So yeah, I hope this video helped. It was just a quick video on how you're going to use liquidity to find your take profits. So this was just a swing high and swing low example. Hopefully you now understand the liquidity, different types of liquidity. I have a free trading Discord in the description where I trade live every single day, so make sure you join that. Yeah, thank you for watching.